Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Welcome to the AICPA Town Hall Series. We're coming to you live from Digital CPA in Nashville. It's great to be with you, and you can see that I'm here in person with Barry Melanson and Lisa Simpson, two of the anchors of the Town Hall Series. We're thrilled to be with you today. We're thrilled to be with the Digital CPA community as well. So first, I'd like just to kind of highlight once again for everybody, what is the overall mission of the AICPA Town Hall? And what we're all about is interpreting in real time the latest information. And today it's going to be another power hour. We've got a lot to discuss related to what's happening in Washington, D.C. So we interpret that, we give you we bring the best available information to you, and we analyze it, and then we talk about building out capabilities and strategies. And we're going to be doing that today with our panelists. We've got Mark Koziol joining us. You know him. You know, he was one of the original anchors of the Town Hall Series back in April of 2020. He's now with Elenial. We've got Pascal Finette, who's here at Digital CPA with us, one of the keynoters, and he's going to be talking about innovation. And we also have a practitioner, Lindsay Stevenson. So this is the agenda. We're going to kick things off with Barry talking about what's happening in DC. Then Lisa Simpson's going to give you a technical update, talk about the latest with ERC, and I covered those other items just a moment ago. So here's the group of panelists, but let's kick things off now with Barry and talk about what's going on in Washington, D.C. You see here a General Accountancy article on some guidance that just came out, and Lisa's going to be talking about that shortly. But first, Barry, a lot going on in D.C. In some ways, as I look at this reconciliation bill, I think back to December of 2020 when we were talking about that big business relief bill, and we didn't know where that was going. And then finally, at the end of December, that bill was signed into law. So right now, we're talking about where is the reconciliation bill, and it looks like things are slowing down.
Yeah, you know, our last town hall, we were talking about, well, maybe there were some dates in early December that could cause some action. Clearly, those dates are shifting, and even passage before what would have normally been a cutoff date right before Christmas is certainly in question. I guess the important thing in your example of 2020 is that all things end up unpredictable in some form or fashion as to exactly what might happen. But as it sits right now, I guess there's a couple of interplays going on. We still have a debt ceiling issue, potentially transfer of money from the Transportation Trust Fund that could move that date. It looks like that's a December 21-ish type of date. The estimating, you know, that goes through an estimating process based on receipts and the like. You know, we have a 50-50 Senate. There is a procedural process that must go in that has not really started yet, which is a parliamentary process that says what is even eligible to be in a reconciliation bill. The reconciliation bill and the definition, so-called Byrd Amendment, really is about what is germane to that particular bill. It has to be tied to revenue or spending type of activities. There are a lot of things that came over in the House bill that people will argue are not about spending and revenue type of activities. And the process for that is a very detailed process in which you know, there's an argument made to the parliamentarian of the Senate that this should stay in or can't stay in. And some of those things that they're talking about staying in include, you know, paid time off, certain ESG activities and the like. And those things are fairly controversial, and they're not overwhelmingly supported in the Senate either. And so even after they go through that process, then that's sort of Democratic-led today because they're in the majority, then the Republican Party has an opportunity to object to those. And then there's a whole process for this bill that is so-called the vote-a-rama, in which there's a ton of amendments that get offered, and they go through the night and vote, et cetera. And all of that is in the context of, frankly, polls that are all over the place on the popularity of the president, the popularity of certain members of Congress, or at least overall support of Congress in general. And it makes for a real dicey situation. And we would say, I think we would still say the most likely outcome, if it's going to pass in 2021, is probably right before Christmas. That's getting tighter and tighter by the day. There's pressure from parts of the Democratic Party in the Senate. It's really being held up by some concerns that Senator Manchin from West Virginia has, who, by the way, sits with very high polling numbers in his home state of West Virginia. And so there's some pressure to say, let's just vote. We think, Manchin will vote yes as a Democratic member of the Senate. Let's vote and let's see how it falls out. That's pretty a high-risk process because it fails if they don't actually have his commitment. And it easily could roll over, and I think there are a lot of people in Washington saying the more likely right now is it rolls over into 2022. So, and then all bets are sort of off because the fact pattern starts to change in 2022. So,
well, Barry, maybe just a couple of comments on things that are very active in the press. I mean, you've got Elon Musk doing interviews with the Wall Street Journal and saying he's not for the bill, and talking about the huge credits that are going to be offered for electric cars, and then some of the parameters related to them, related to workforce rules. So that's one topic, and then the other topic is the SALT and where those caps are going to fall out.
And SALT has become a very political hot button item because in the House version there is sort of a couple of year window that allows for the deductibility. Within the Democratic Party in the Senate, there's some disagreement and some deals being cut as to where a limit might be applied, where you could get a full SALT deduction up to a certain limit of AGI. Some of the revenue estimating on that has changed, which sort of prices the bill separately. And there's disagreement as to where that gap is, where you take the benefit of some of those changes by making modifications to the law. And Senator Sanders is in one place, Senator Menendez is in another place, and so that is a very complicated process. It's like it will almost certainly change from what's in the House, but it's even a negotiation in the Senate right now. And then, ERC at the last town hall, and we spent a lot of time on this because the infrastructure bill said ERC ends September 30th, which is creating a lot of complexity based on payroll tax payments that were made into September prior to the passage of that bill. Into October prior to passage of that bill. And there was virtually no noise about that coming back into play. But now we have a new variant of the COVID. We've got pressures from the political process. So now at least there's some people talking about the possibility of addressing that. It's probably not a high probability, but it is much greater than it was at the last town hall.
Well, we got a pretty busy slide here. We're gonna unpack that in a second. But just to summarize, Barry, so right now, looking like there's a chance that something could happen by the end of the year, but in some ways it's beginning to feel like this, and we've got a town hall, I think it's December 23rd is our next town hall, so that'll be timed well, but a very good chance that this is going to push into January along with the debt limit issue. So both items pushed into 2022.
I think if we were having this town hall on Friday, we would have said the most likely outcome was that it's going to pass on December 23rd or 24th. I think we would say it's 50-50 now, whether it passes in December or rolls over into 2022.
And Lisa, this is a live show. She's just passing me saying an alert that lawmakers are, go ahead.
Yeah, alert just came in that lawmakers are closing in on a debt ceiling deal. So again, live show.
Probably a debt ceiling deal that moves to the February date that they funded the government, which then, if we get it to 2022, sort of becomes the only other natural sort of deadline that will be in place once it flips to 2022.
So thanks, Barry. Thanks for that summary. Let's now, Lisa, if you want to talk a little bit more about this penalty relief and the items here highlighted.
Thank you. So we all know that employee retention credit has been an issue that we've talked a lot about, as Barry said. And when ERC was sunsetted through the infrastructure deal, it sunsetted effective September 30, 2021. But that sunset didn't happen until after September 30. So it created some confusion, and we were really concerned about penalties, notices coming in, returns crossing in the mail. So yesterday, the IRS issued notice 2021-65 that addresses penalties related to employers who took ERC in Q4 2021. So you had a couple of ways that you could take ERC. If you took it as an advance payment via Form 7200, then as long as you repay those advance payments by the due date of the tax return, so your 941 when its next due date, then you won't have any penalties charged to you. If you were an employer who was simply reducing your payroll tax deposits as you were going along and making your payroll, then you have to repay that by December 20, 2021 to have those failure to deposit penalties waived. If there's some reason that you're not eligible for penalty relief in one of those two circumstances, then the IRS does say that it's making a reasonable cause penalty relief available. So this is, as I said, it's been an issue for us since ERC was sunsetted early. We sent a letter to Congress, and we've also been talking with the IRS and Treasury about the potential for chaos. So we do have some clarity around it. I know it's not just as easy as us saying, you know, write your check by December 20, but at least we have some clarity, and we do have procedures around getting those penalties waived. So it is some progress.
Barry, is there anything else that you'd like to add? I mean, this is great job. We don't have the advocacy team with us here in Nashville. They're working in D.C., but a lot of work went into this.
A lot of work and still some work there. And, you know, the underlying sort of current here is it does create still more of the servicing issues from the IRS, which we've been sensitive to. This probably helps us a bit, but it doesn't go all the way. And frankly, as the noise potentially builds on, you know, maybe allowing ERC to go further in this bill, which is probably, again, a low probability, but it's not zero, then, of course, all of this would flip back in the other direction.
I'm sure we're getting some questions on that, on the probability of ERC being extended.
Less than 50%.
So less than 50. Barry, here's a slide that sets up Marcy Russell, who's going to be joining us at the end of this year, the next town hall. She's a leading economist. She's been on past town halls, and I know this is a slide that you leverage as well, just looking at where, you know, growth is going. And I remember the start of this year, in some of the April town halls, we were talking about it looked like it could be 7 to 10%. Obviously, that changed. So it'll be interesting to see where her projections are for 2022.
Yeah, and you know, we said then that it's obviously these are projections and they will continue to evolve. But I mean, it's still very strong numbers. Obviously, unemployment and you know, sort of work environment changes a lot of these activities. Interest rate changes potentially. Those types of things have pretty significant impact on these regions. But I think, you know, one of the things that I think is very important, and this shows the world really, the different regions, is that there is a pretty significant variance between different parts of the world. We know the supply chain activities and activities, sort of impairments that are there. And that I think what we're really seeing is COVID having impacted the world in different places, in different ways. And frankly, I've said this before, you know, we live in a country that was able to spend because, you know, the US dollar is the world currency that really, you know, attacked a lot of these issues. You can second guess some of that, but it did attack some of it, and still the numbers are pretty strong from a U.S. perspective.
And I think we're going to be bringing Pascal Finette up in a second as we talk about innovation. I mean, it's an incredible time for business startups. I think we're at record levels of new business incorporation. So there's lots of opportunity and definitely, you know, different opportunities in different regions of the world. So before we bring Pascal up, we're gonna get into a few more technical updates.
Thank you. So just a quick look at where we are on PPP forgiveness. This is for combined 2020 and 2021 loans. Just as an FYI, about 95% of the dollar amount of the 2020 loans have been submitted for forgiveness, and about 57% of the dollar amount of the 2021 loans. So we've still got some, quite a few applications outstanding for forgiveness, and we'll be looking to see if that volume picks up by the end of the year. By all accounts, the SBA's really picked up the pace. That continues to go smoothly from what we're hearing.
And Lisa, we've got a number of the leading PPP firms here with us in Nashville, and what we continue to hear is this has been a very positive experience with their clients.
Absolutely. And helping their clients through the process has really solidified that deeper relationship that we always talk about as a trusted advisor. So switching gears just a little bit, if you remember from the last town hall, you saw me reading more breaking news from my cell phone as we got some really important IRS guidance around pass-through PPP loan forgiveness. So here's a look at a refresher on those 3 revenue procedures that came out. They were released on November 18th, and they are very taxpayer favorable. We got some good clarity around it. The purpose of these revenue procedures is to address the tax treatment of pass-through entities, loan forgiveness, and timing of the basis inclusion and tax-exempt income. There's a great Journal of Accountancy article that you can look for on the site, but there's also something that we're still waiting for some clarification around for S-Corp, AAA, and OAA. But if we look at, and I'm going to apologize in advance as we flip to the next slide, a lot more words than I would normally like to have on a screen, but I wanted to just give you in one specific slide the highlights of each of these 3 important revenue procedures. So if you look at the first one, it's about, this is the one that's really very favorable, and it's about giving flexibility on when that tax-exempt income and basis inclusion can be recognized. So it can be as those eligible expenses are paid or incurred, which, as you can see, we had been advocating for months, when the loan forgiveness application is filed or when it's formally granted by the SBA. So that gives you and the taxpayer some flexibility in looking at what's going to be more beneficial. The next revenue procedure, 2021-49, is how that flows through for partnerships under Section 704 and 705 for basis adjustments. And it also gives stock basis adjustments for consolidated groups. The next one is revenue procedure 2021-50, and this is all about amended return procedures for those eligible BBA partnerships. And those are the ones that are subject to the centralized partnership audit regime under the Bipartisan Budget Act of 2015. So we call those eligible BBA partnerships. The important part about that is that they are required to amend by December 31, 2021. So if you have an eligible BBA partnership impacted by this, the amended return would be due by 12/31.
Well, thanks, Lisa. Barry, I think you had an additional comment.
Yeah, Lisa covers the technical points. I wanted to make a technical point on the Tax Act discussion that we had with the uncertainty on that. And that is, right now, you can have your opinions as to whether you want it to pass or not, but if it passes now or before the end of the year, most of the provisions are going to have a January 1 effective date. If that skews into 2022, it becomes very complex as to what might happen with that. It's a major rewrite of a lot of provisions to start changing due or effective dates of the different provisions, and that makes the act way more complicated because it could move to different than January 1. Frankly, it sort of depends on how long it skews. If the bill were to pass, in the second week of January, it probably stays January 1. But if it starts to get late in January or February, then of course you have some implications. So our practitioners probably don't want to hear that. Generally people like that cleaner cutoff on January 1.
Well, thanks, Lisa. And now we're going to bring Pascal Finette up to join us. And just, we're going live here to our town hall audience and to the Digital CPA Conference. We've got close to 7,000 attendees via the town hall, 800 attendees via Digital CPA. And I just want to provide a little bit of context for the town hall attendees on what Digital CPA is all about. We started Digital CPA a decade ago, and the reason why was because technology was truly changing the practice of accounting, and we wanted to bring together a progressive group of firms to talk about these new capabilities in the evolution of services. And that's what we've been doing for the last 10 years. And in many ways, this community played a huge role for the profession over the past 20 months, because many of the service lines that we've talked about here at Digital CPA, in particular, the client accounting services one, played a huge role in allowing firms to continue to support their clients during the pandemic. And Pascal Finette, you've seen him before in the town hall. He's been here many times at Digital CPA. He's a great partner, and he's really helped us think about innovation and disruption. And yesterday, Pascal, you gave a fantastic keynote where you shared some new thinking on how to really, succeed with all of these new capabilities. So here's one of your summary slides. I thought you could unpack that, and then you, Ian, Barry, and Lisa will have a broader discussion.
Absolutely, and thank you so much for having me back. I just want to acknowledge the fact, what a year this has been. Jesus, and I thought last year it was already like the right time to say this. And also just hearing you all speak about the challenges the profession faces right now, and just like in the operational side, just makes me very thankful that I don't have those challenges and I can outsource them to my CPA. That being said, we've been talking a lot about innovation and disruption, and clearly we live in very interesting and disruptive times. And probably just sharing briefly what we talked about yesterday. So we became, at BeRadical, my firm, we became really fascinated by this idea about what actually happens in the world of disruption and how do you navigate those changes. Because here's the thing, I believe that the profession is at a really interesting point in time. Taking into account clearly all the work you need to do right now, which is manifold and plenty, but also understanding that we are moving into a very different era. And I think now is the right time to actually position yourself for this new era. And probably two pieces of insight I want to share about how do you think about disruption. So the first one is really this idea around we want you to actually rethink the word disruption. And Barry yesterday in the keynote before mine used the word transformation. Because here's the thing, when you look at disruption as we're talking about it, what I believe you need to understand is that the underlying consumer need, the thing the client comes to you and hires you for, actually doesn't change all that much over time. Classic example, if you think about the horses and buggies, which got disrupted by the car, and rightfully so, we talk about a disruptive moment if you were a horse and buggy manufacturer. But the underlying consumer need, that you actually need to go from A to B in the least amount of time with the least amount of resources and most comfortably, actually hasn't changed. And when you think about all the disruption stories we keep telling, the lore of disruption, you think about the Kodaks, the Blockbusters, the Nokias of this world, the underlying need actually doesn't change. And I invite you to apply this model, which we like to call the state change theory, apply this model even to your industry, your particular situation, and also the situation your clients are going through. So it's really less about disruption, but it's much more about thinking about what is the current state you are in, how do you fulfill a consumer need, a customer's need, and what could be the next state. And clearly in the profession, we see a lot of talk about automation, we see talk about the blockchain, et cetera. These are all good indicators of this shifting in the delivery, in the state, how we fulfill that customer need, rather than a completely new need arising. So based on this, and this has been work we've been doing for the last 4-ish years, and we've been rolling this out to our clients worldwide, we became rather interested in the question, how do you actually be successful as a innovation and disruption practitioner? And the starting point for us was we started talking to people who've been doing this very successfully. And I had an interview with a gentleman called Andy Billings, who works at a company called Electronic Arts. He's a game maker, has been in the industry for 40 plus years, has stayed relevant in an industry which is dramatically shifting every couple of years. And I sat down with him and I asked him, so how do you do this? And he gave me a couple pointers, but then he ended the conversation with a really interesting sentence. He said to me, you know, Pascal, when you talk to the people on the front line, they will all tell you this whole disruption thing doesn't look like anything they write about in the books. And we took that as a rallying cry and said, okay, then let's talk to the people on the front line. So 250 in-depth interviews further. And we talked to anything from leaders at organizations like Google X, the innovation lab of Google, to the CEO of the largest steel company in Europe, to two people companies. And it will not surprise you, you find commonalities. And we summarize them, and I think this is, for the viewers, helpful to think about as you're thinking about how do I position myself to be successful in the future. We summarized essentially and found 5 keys to success, because we hear them over and over and over again. And let me just very briefly give them to you, and then I'm curious about the conversation. First one is, everybody talks about process. Everybody tells us that you have to have an agile process. And if you know agile, many people equate agile to the software development methodology, Scrum, et cetera, or the Agile Manifesto. But it's really about being agile in the core of your organization. And what this means is that you acknowledge the fact that you're engaging in a complex environment where you don't have the answers. So instead of trying to pretend you know, and write your 5-year plan and then execute against the 5-year plan, you rather set the North Star, you understand where you need to go, what is your big vision, but then very quickly iterate basically your way towards the solution. That's number one, process. The second one we heard consistently is all the good companies have a very deep understanding of what they call first principles thinking, really understanding what it is the consumer, the customer needs at a very fundamental level, like on a basis level of like, this is an actual validated need. And yesterday at the conference, we actually asked the participants, how much time do you spend with your customer per week? And really understanding the customer, not sitting down with your customer and doing the tax return, or sitting down with your customer and wining and dining them, but rather sitting down with your customer and really understanding what is it they actually need. And it was really rather interesting that a decent amount, roughly 50% of participants, and I understand where it comes from, but 50% of participants spend less than 4 hours a week with a customer. And I think that's a miss. I think you should spend way more time on really understanding the needs and wants of our customers. And I think, at least in the profession I have experienced, that CPA firms have taken this up. They have become much more a trusted advisor. Barry likes to talk about this a lot as the future of the profession, and I think it's 100% right. So first principles. Third one is, how do you manage the tension between your core business and the edge? And the edge being the new thing. Because the challenge you have is that in some ways you need to be effectively bipolar. Because the edge you run as an efficient, effective, optimized organization. This is where you look at metrics like return on invest, margins, profitability, et cetera. On the edge, where you try the new things, you do the exact opposite. And it's really hard to manage these two things in the same time. So it requires a different form of leadership, which gets us to the fourth point, like how you actually show up as a leader. It will not surprise you that this is important, but I think the core point here is, how do you actually show up as a leader who is able to lead into and in the unknown? Because all the leadership paradigms we have learned in, even today in business school, I teach at Berkeley Haas, and we still teach you leadership skills which are effectively somewhat outdated in terms of they're helpful for you to step into a known world, and now we're living in a world where you have massive amounts of unknowns. So it requires a different form of leadership. And then the last component, the fifth one, is upskilling and reskilling. So the idea of how do you create relevant upskill and reskill opportunities for your people, and how do you scale this throughout the organization? And very often what we see in the terms of upskilling and reskilling, it is something which is somewhat half-heartedly being done, where we say, oh, we need digital skills, and then we buy a LinkedIn Learning subscription or whatever is your vice here, and that clearly doesn't cut it. We need to really identify what are the skills we need, and I think the AICPA does an amazing job at pointing that out, actually, and how do we get our people to actually have those skills? So those 5 components are predominantly the components we see in the most innovative, most disruptive, and sustainable companies all around the globe.
Well, Pascal, thank you for that summary. I mean, I think we can take that 5-minute segment and we'll package it and we'll send that out, because that's some really good thinking for firms to leverage. Question I have is for both you and Barry, is related to small firms. We've got a lot of small firms on the town hall. What we like to say, and we've been saying for years, is technology, the cloud's the great equalizer. This week I've been with firms at dinner of under 10 professionals, and I've been with the top 10 firms. And they are at times providing similar services. So I'm answering the question a little bit. But Barry, first, how do you all the strategies we're talking about here at Digital CPA and what Pascal just said, how do you digest that for the small firm as a key takeaway?
Well, I interact a lot with small firms as well, Eric, and I can just hear what they were saying when Pascal was speaking about, I am so busy now, I got all of these pressures, how can I possibly do this? And particularly into that middle bucket of that core and that edge, how can I spend any time in that edge and also spend time with my clients? But I think I go back to, what are we doing? What is the purpose? And actually, we did a vision project years ago, and we very clearly stated, if you really think about the profession's role, whether you work in a company or whether you work in a firm and you have clients, we crystallized that down to basically making sense of a changing and complex world. And if you think about us as the business advisor, that trusted advisor, for a client, if you're really interacting in that space, it may be the need for compliance. It may be a financial statement for a banking, and then so how do you do that efficiently and effectively to meet the expansion needs or whatever that your small business client might have? But it's probably not, in using the horse and buggy example, and I'm interested to see how you react to that. You said it's about moving from here to there cost effectively, et cetera. And it's really about solving my problems, right? It's about that small business solving their problems. And it's not about the nuances of tax returns and all of those other things. Those are just elements of how you solve those problems. And I think when you think of it that way, you can think of different business models. You can think of different fee models. You can think of different staffing models. You can think of different how you generate diversity in services, even in a small firm environment. And in many ways, it might be easier in a small firm because you can be closer and have a centralized point of closeness to the clients. What's your reaction to that?
Absolutely, 100% agree, Barry. And probably two comments. The one is, today over lunch, I spoke to a small business owner, CPA firm, less than 10 people. And we talked about the fact that he said to me, I think nobody ever wanted to get a tax return from me. They want to have peace of mind. Right? Like all the businesses they work with, they basically say, listen, like I want to have you take care of this stuff. I want to be financially savvy. I want peace of mind. And this brings back an interesting analog, which Stephen Butterfield, the founder of Slack, the communication platform, wrote an article, an internal article to his team when they founded Slack. And he likened Slack as, and he mentioned this, he said, we're not in the business of selling saddles. We're in the business of selling horse rides. And I think that's exactly the right way to think about this because, again, and I think this is a huge opportunity, particularly, quite frankly, for the smaller firms because you're so close to the customer. You have the actual deep relationship with the customer. And I see this with my CPA firm, which is a relatively small firm, so like less than 50 people. The care and the conversation I have with them is really interesting. And I think there's a huge opportunity. And again, like the question for me is to ask, if I identify the need, how do I best fulfill that need? And I believe that this is where you see these state changes happening, where we go from like an Excel spreadsheet to an online solution, a cloud-based solution, where we go from manual to automated AI solutions, et cetera.
Well, Pascal, thank you for being with us here. Live in Nashville on the AICPA Town Hall. One thing, if I just reflect on what you and Barry just said, this has been a defining moment for these firms, and they have done exactly that. They have delivered solutions and advice and insights to keep their clients and businesses intact over the past 20 months. But thanks for your partnership, and we look forward to having you on a future town hall. I'd like to now bring up Mark Koziel, the leader of the Millennial Firm Association, and Lindsay, we can do a wider shot here, Lindsay Stevenson, who's the Chief Growth Officer or Transformation Officer for BPM. And it's great to have you both with us today. So, Mark, I'm gonna kick it off with you. Just it's been, I think, about over a year since you've last been on the town hall. Welcome back.
Thank you. Thank you.
And just some reflections from you on, being here at Digital CPA the past year, and maybe some insights on your new role.
Thanks. And looking back, I mean, overall, just thinking about the fact that this is a 10-year anniversary, I think is just absolutely amazing. Just to see the community that's been created, how they're feeding off of each other. For me, seeing what small firms could do and kind of lead the charge in some ways. Some of the smaller firms that have really embraced this idea of technology, client accounting services, to Pascal's point about the customer and the customer relationship being so important, and a lot of conversation around that. But, I've appreciated all that you've done and the AICPA over the last year with the town halls. I watched Lisa and the team progress and just really being there ultimately for the member and all of the services and the things that have been presented. And this real-time information is just a brand new way of interacting with our members. What do you have, 6,000, 7,000 you said on these things on a regular basis? It's just amazing. Where we started, I think, with about 700 when we had our first one in April of 20.
And Mark, just maybe a little more context on Allennial. I'm not sure if the whole audience knows.
It's an association of firms, and the world has gotten more global, and there's that need for global connectivity to be able to serve our clients. And our firms range in the U.S. from 5 million to 500 million. And that diversity of size, diversity of perspective is different ways that they can serve their clients. And I say constantly to our member firms that you should never lose a client because the client feels that they outgrew you. There are ways for us to collaborate and make that happen. That collaboration, the community, you've created that inside of the client accounting community with Digital CPA. These are firms who pay to have that closer relationship inside of there.
Well, thanks, Mark. We'll be coming back to you. So, and welcome. Lindsay,
thank you.
Chief. Barry and I and Lisa were just in a session with a number of transformation and growth officers from the large firms, and welcome back. Yeah, I know you were with us in Las Vegas at Engage. So, if you could provide some perspective on the past 6 months and what you're seeing here at this event.
Yeah, I mean, thank you for having me. It's been really exciting. I think my favorite part is just like the pop-up conversations that happen throughout the hallways, and as we rush out of sessions trying to get to the next session, it's been really exciting to hear all of these firms talk about what's next and really talk about what they heard in that session and being passionate about doing something differently. My whole job is around trying to do something different than the way we have always done it and create excitement and enthusiasm around that. And so here in this community at Digital CPA, it's like the norm, right? There's really no fear around what we don't know. And that's, what I do for a living is we don't know, right? We're gonna, Pascal said it, right? We put the North Star out there and say, I think we're gonna try for this, and this is what we wanna have out in front of us, and then how do we get there? And we take these little incremental steps, and pretty soon we're like, wow, we're doing it. Okay, how can we share that out? And this community is great because they share it, right? It's not hoarding, it's changing the entire profession. It's not just for your firm, which is really neat to see.
Barry?
Well, the 10 years, I think, is in people like Mark and Lindsay and multiples of people like that are here. I really believe they're playing a very, very important role for the profession as a whole. In any type of change environment, we at the AICPA, we can't mandate people to do certain things like that. Maybe some things on the quality side as it relates to auditing in a very narrow part of the profession. But it's really about where we can bring resources together that sort of see the future, or at least maybe it's foggy, but some part of the future, and really how the profession fits into that space and what the opportunities are. And it's not every one of those is the opportunity for every firm. It doesn't work that way. But people like Lindsay and the firms here and Mark's role when he was with us as well as now, and hundreds of others, I said it yesterday, they really are, they're pace setters and early adopters, if you will. But what is happening is the 10-year anniversary is sort of a notion of we need to move to a different stage, and the world we live in is incredibly fast-paced. And so we have to get to higher adoption for the ultimate overall success of the profession as a whole, as well as an individual firm. And I think that that is really how I reflect on this period of time.
Yeah, and I just want to kind of add on what you just said there about where we're going next, because I think we did prepare ourselves well for how to support clients and businesses over the past 18 months. But as Pascal and many others have talked about over the past couple of days, we've had this huge acceleration. So we're actually at another inflection point, and this is another time where we do need to even step back further. And we've been talking about that, stepping back further and looking at the strategies related to the service lines as we think about the advancing technology capabilities, and as we think about doing more through partnerships and even outsourcing. So Mark, I'm gonna bring you into that discussion here, because it's multifaceted. And we've talked about this a little bit on the town halls, CAS, Client Accounting Services 2.0, and what that means. But why don't you talk a little bit about how you've had some discussions with firms on how to manage this next phase with the talent issues and everything else that's going on?
So we had a session here about productivity in the 21st century, and it was kind of a backhanded way to say you need to start outsourcing, you need to start looking at different things. We had Charlie Weinstein from Eisner, Kurt Gressens from Wipfli, both of which have started their own outsource, I shouldn't even call it that. They have right shoring is how they now describe it, that they have multiple offices around the world, and they're going to where the talent is. And the fact that the big four have each, what do they have, Barry, over 20,000 employees each?
Probably at all of them over 10, but some of them at 20.
Yeah, and so when you think about the fact that so many of what we were used to in the pipeline here in the U.S. was people went to work for Big Four, they spent their 2 years, they left, they started their own firm, or they went to a smaller firm, or they went into industry. That's all happening in India, and so we need that talent. And people keep saying to me, we could grow if only we could find the people. And I say, well, they're either a unicorn or they're awful, because everybody's fully employed today. So you need to find a better way to grow. And so it's automation and it's outsourcing, and that's been a lot of the discussion. I think in CAS the same way. We keep talking about that industry niche, building the right type of practice. And we had 13 of our member firms at a CPA.com workshop that they are now taking that transformation process. And I can't encourage firms enough to start that journey, start with the workshop, do the assessment around CAS. It's all, the tools are there, but the firm just has to pick them up and lift and go.
Thanks, Mark. And I mean, there's a lot of nuances to what you just said, because, again, we have firms of all sizes on this call. So clearly many firms are not going to build an outsourced operation in India. But what's happening here is there are new solutions coming to market that will be available to these smaller and mid-sized firms. And that's something that we'll even be talking about a little bit tomorrow during some of the digital CPA keynotes. But Lisa, you were talking recently about the top firm issues. We've talked about that here on the town hall. How are you thinking about firms managing through all of this next phase of innovation?
I think it really comes down to having a defined strategy and being clear on what your firm's goals are. No matter your size, you have to have a clear strategy, and so you can start taking those steps. And you're not going to transform your practice overnight, but as Pascal likes to say, slowly, gradually, then exponentially is the pace of change. So creating your strategy, being really clear about what you can do, what you want to do, which is an exciting part of a conversation I'm going to be having tomorrow, defining what you like to do within your firm, and then building your business model around that. So there's so much opportunity, so much for us to talk about for the next year.
Well, Lisa, I'm going to come to you to pull a question. We got a few monitors up here, so pull a question from the audience. But what I'll do while you're doing that is just ask Lindsay to talk a little bit about some of your strategies related to pricing and subscription services at BPM.
Yeah, so we have diverse kind of approaches, right? So as a large firm, I think we actually struggle with some of the same things that some of the smaller firms do, right? Is it different pricing for different service lines, and how do we deal with that every day. And so we're actually looking towards doing advanced pricing modeling in our firm, and we'll be taking that journey with a consultant that's going to help us come in and actually define those tiers. But even defining, what practice does that make sense for? How do we roll it out? It's a process, and I think that's where, at least, I was in smaller firm, so I think it gets overwhelming when you think you're going from A to B, and that seems like such a huge jump. And really having someone help you see that it's really A to A.1 to A.2 to A.3 to 8.4, and then pretty soon you get to B and you look back and go, holy cow, we did it. Oh my gosh, we got here. And then it becomes so much easier to do the next changes. So I really think advanced pricing, the opportunity there for us as a profession to get away from putting value on hours that really are not productive and don't generate output, will really change the way that we serve the client community.
And I think we ought to just put the context here. This is all hard. And actually, Pascal said, the same thing yesterday in his transformation discussions. And it's not to imply that it's easy. But I think, I really, if I would add one thing to it, it's about system thinking. It's about understanding that the needs of the business world is changing dramatically. On a larger firm perspective, for instance, we haven't talked about ESG, but ESG is going to be a big issue. And probably a little bit longer before it cascades down into smaller business enterprises. And so, but from a smaller firm perspective or a smaller business perspective, it's that system thinking about, we have different human capital elements here. We've got huge technology. We got different niches or needs that the customer or the client, or if you're in management accounting, the company has that you have to be able to address. And it's in thinking in that system way, as opposed to saying what I've done before is the answer. It's how do you evolve that? And clearly people have been evolving and will continue to evolve. And I guess what we're saying is that that system makes that speed of evolution today greater than it's ever been before.
So quick follow-up for you, and then we got a lot of questions coming in. A little bit more on what is advanced pricing?
Oh, okay, that's a great question. So advanced pricing is being able to take within an industry and or a service line, having a tiered approach. So you have a certain level of service, and then the next level of service, and those are for different prices that are clear and transparent to the client up front. And then also allowing you to cross-functionally bundle so that we can use technology services and CFO services and our CAS services, actually creating a model so that when we do proposals for clients, we can meet all of their needs with one engagement proposal instead of trying to coordinate 7 and give them different pricing on different models.
Thanks, Lindsay. So just a lot of questions coming in about some of the offshoring comments, and let's just kind of unpack this a little further, because what has been happening over the past 30 years, if you look at the payroll revolution, you look at payroll service, payroll bureaus, it's about technology and people. And there are elements of the back office that are going to do something similar to what payroll's done, and that's what we're calling this outsourced bookkeeping. And with outsourced bookkeeping, it's going to be technology platforms plus people. Those people, they can be in the U.S., they can be at other locations around the world. You think how we work with call centers, how you work with many other service lines, and at times the support services for those capabilities are in the U.S. and they're outside the U.S. So this isn't about moving work to another country. This is more about the combination for some tasks, because there's some of these more basic bookkeeping tasks. Some firms may say, I can't staff that talent, so I'm going to use a combined solution. So Barry,
yeah, it doesn't matter where it is. It doesn't matter if what's the mix of human capital versus technological solutions. Again, we got to think about what's the outcome we're trying to achieve. And the outcome you're trying to achieve is, in this complex world today, your best talent needs to be deployed on solving client problems, not processing. And technology gives us the ability to keep the profession moving up that process. That's what professions, which we are, is all about, that bring that type of element of thinking and problem resolution into that environment. You can make the analogy, and it's not physically different, but what is happening in the medical profession? The highly skilled, trained doctor is not necessarily spending as much time with the patient on the early diagnosis or the injections that need to take place, et cetera. We have different layers of professional medical professionals, but we're freeing up doctors to do some different work there. And it's the same thing in our profession. We have incredible intelligence and skill set, and a sole proprietor has incredible knowledge of the business world that their clients are operating in. They have this wealth of thinking that can be deployed if you can shift how some of those other services are being done.
Yeah, and I just want to expand a little bit further on this, because what's happening with artificial intelligence is, so you are going to continue to have at the low end the automation of the inputs with artificial intelligence, more of that entry data work done by the technology. But as you work towards that, you're going to still have some assistance with bookkeeping assistance. So that it's a question of, is that assistance done at the firm level, which is not at the higher level of kind of information services or advice that Barry was just talking about. So that's what we're highlighting here. And I think what we try to do as we work together with these firms is kind of evolve the practice. And this is just an evolution that's occurring. Lisa, any other? We've got some other questions coming in. We got a tax question.
Yeah, we've got a tax question that I want to address, Barry. When we were talking about Build Back Better maybe getting pushed into 2022 before it was passed, a lot of concern about what the effective date of some of the tax provisions are. So January 1, 2022.
Well, January 2022 is virtually all of the effective dates in the existing piece of legislation that's bouncing around. The problem, as I mentioned, becomes if it starts to extend beyond, well into January or into February before it's passed, then you're going to have some pushback on those effective dates being retroactive. And so it almost becomes a total rewrite of the effective date notion in the bill. But for right now, if it were to pass, let's say, December 23 or 24, it's virtually all January 1.
Thank you.
Well, we're going to continue on here. You can bring the slides back up. I mean, we've just covered this 10-year look back. These were the topics that we reviewed here with the panelists, and we actually moved right into our open forum. We've been talking a lot about where some of these service lines are going. We're working hard at putting together methodology and processes related to them. Here's the group that have been part of today's town hall. So great thanks to Mark and Lindsay and Pascal for joining Barry, I, and Lisa. Look forward to having you back again sometime soon. You've got the archive of the AICPA Town Hall series here on AICPA TV. You can also access it via podcast, and every week there's a couple of thousand downloads of these materials. So here's a quick summary. Barry, we're gonna stay on time as we always do. So it's a little cute. We're gonna keep this
quick,
keep this fast. But it is December 7th. Some comments coming in, and it's let you recognize what this day means for the nation.
Well, obviously, yeah, a historic day, and we won't cloud that with the passage of any tax act today. Let's just put it that way. But clearly, we live in times that none of us have ever experienced. But there have been other times that have been very, very serious, and we're fortunate to live in a country that isn't really facing that. Although there are disputes around the globe, and I think that it's important to be reflective of how successful we have been as a country, and really in retrospect, we have this discourse going on in this country today that is so, I don't know, polarizing is probably the right word. It manifests itself in the media and social media and certainly in politics, but we need to remind ourselves, and I think our profession has a real important role in that, Eric, to be honest with you. We are many times the people that can bring sanity to different discussions and find solutions, and we lack that in society, and let's hope it doesn't take some major event like that to rally us together.
Well, Barry, thanks for those comments, and thanks for your leadership and all that you're doing. So here's the next town hall. I said at the beginning, it's December 23rd. We look forward to kind of giving you an update on all of the legislative activities then, and then we're going to kick the year off on January 6th with you with the first town hall of 2022. Want to thank the town hall community for being with us here on this Tuesday as we're broadcasting from Nashville, the Digital CPA Conference. These next sessions will be back at a regular time, Thursday, 3 p.m. And thanks to the Digital CPA community for joining us as well. That's all for now. Have a great day.
Thank you for your participation. You can now subscribe to the AICPA Town Hall Series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.